Okay, in this chapter, we're going to cover the following objectives. First, why do we need a cost systems? And we'll define the job costing system. We'll discuss the interrelationship of cost accumulation, cost measurement, and cost assignment. We'll identify the source document used in job order costing. We'll describe the cost flows associated with job order costing. First, why do we need a cost system or cost accounting system? First, to prepare the financial statement, management needs a cost of goods sold figure on the income statement and on inventory figures on the balance sheet. For internal needs, management needs product cost information to establish prices, to compare actual with budgeted figures, to properly decide to make or buy decisions. And often outsiders such as insurance companies or government agencies have a need for product cost information. Job costing is used by companies that produce unique jobs tailored to customer specifications. Examples of companies using job costing systems: service companies such as public accounting firms, consulting firms. For manufacturing company, example will be ship and aircraft building. In job costing, costs are accumulated by job. Once a job is completed, the unit cost is determined by dividing the total manufacturing cost by the number of units produced. Direct labor costs are determined based on time ticket documents. Direct material cost based on material requisition form, and overhead costs are applied based on an estimate. Job costs are tracked using a document called job cost sheet, which includes cost of direct labor, cost of direct material, and the amount of overhead costs applied. Note that rather than using the actual overhead cost, we apply overhead cost based on an estimated amount. Recall the predetermined overhead rate, which have already been seen in last chapter. Since the former is not really available, the former is the actual cost is not really available on time. This is called normal costing. Over a specific time period, raw material inventory is transformed by labor and support resources into work in process inventory, and then ultimately to finished good inventory. Work in process represent the cost of the jobs not completed. Basically, the cost flow parallels the three stages of productions. First, the purchase and storage of raw materials. Then the raw material inventory parallels this stage. Second, manufacturing using labor and other resources to transform raw materials into finished good. Work in process inventory parallels this stage. Third, storing finished goods. Then finished good inventory parallels this stage. Remember that work in process inventory is debited by applied overhead rather than actual, because the actual overhead costs are not known until the end of the period. Let's see now how costs flow through the different stages of production. Okay, now we're going to show you how the raw materials are moved through the different stages of productions, how they are transformed and then go over the different stage of production. So we start our raw materials with beginning balance. BB stands for beginning balance, plus our purchases will increase our raw material inventory. And then now we need raw materials to start working on the jobs. So we have to distinguish between direct material, DM, direct material, and indirect material. Okay, direct material will be again used by the shop floor. So we have a beginning balance plus direct material here. DM again stands for direct material. And remember that the indirect material is part of the overhead cost. We don't allocate the actual overhead cost to work in process, as I mentioned earlier. So we're going to accumulate all indirect cost, actual indirect cost in here, indirect material. Okay. The same for wages payable. We have direct labor, DL stands for direct labor, and we have indirect labor. The direct labor will be again used to transform the direct material into finished goods. So we have direct labor. And the indirect labor, which is a part of overhead cost, will be debited here in the manufacturing overhead control account. So now, in addition to direct material used, direct labor, we need some other resources, which are the machines and computers and the buildings. So we apply then manufacturing overhead applied here. Manufacturing overhead applied using an allocation base, as we have seen in chapter. This stands for manufacturing overhead applied. As I said, we've seen that in chapter 4, okay? Now, this is the work in process which parallels the production here, production stage, okay? So transforming the raw material into finished goods. So we call this work in process control because this account will summarize all the work done on different jobs, on all jobs that the company is working on. Okay. Once the job is finished or the product are finished, then we transfer them. This is the cost of good manufactured. We transfer them to the finished good inventory. So we have a beginning balance here. Okay. And once this job or the batch of jobs are finished, then they have to be transferred to the cost of goods sold. Here. Okay. Now we have our ending balance here. Okay. EB, and then we have the ending balance here as well. Okay. Now, as I said, at the end of the period, we have manufacturing overhead control here. The actual, in addition to indirect material and direct labor, you have other, other expenses incurred, depreciation expense, for example, here. And we have the rent of the factory. Okay, and all actual overhead costs will be accumulated here, and at the end of the period, as I mentioned in chapter 4, there will be an adjustment that dispose of the difference between the actual manufacturing overhead incurred throughout the year and the manufacturing overhead applied. So as I said here, we don't want until the end of the period to apply our manufacturing overhead to different jobs. So for the sake of timeliness, okay, we need a timely information, we forgo the accuracy. Okay, we don't use the actual, we use the applied. So at the end of the period, there will be an adjusting entry taking place.